Academy. And if this is your first time of coming across this channel, please do well to subscribe to this channel and check out our previous videos. There are a lot of content on this channel that's going to help you on your journey in learning smart money concepts. Okay, so now in today's episode we're going to be looking at what I call the intraday framework analysis. Okay, so I was kind of sharing with the students on our Telegram channel on this YouTube, for this YouTube community. Okay, so I was kind of trying to explain something to them earlier today, and it was like beyond my beyond writing. Okay, so I couldn't pass the message on clearly, so I'm doing this video for them to, to explain the concepts clearly, and I do hope we all learn one or two things from it. Okay, so the thing is, the concept is kind of, a little bit difficult, and maybe some of us might actually have a bit understanding of it. Okay, so some of us, this might be the first time we are hearing it, and others we might have come across it before. Okay, before now. All right, so I'm going to call it the intraday framework analysis. Okay, so with that said, let's get down to today's business. Now, the intraday framework analysis, as I'm going to put it in a simple definition, okay, it simply means the framing your intraday setup within the daily range, okay, that you are currently trading in. Okay, so now this is on Friday's price actions on the Nasdaq futures market. Okay, this is on Friday's price action, and as we know, I have been bearish on the futures market. Okay, we have been bearish on the futures market, right? So this is the whole transactions that occurred on Friday. Okay, so let's go down and see what I mean by framing your setups on on your current daily range. Okay, so now this is one if we are bearish, like we said, when we are bearish on any pair, okay, on any asset class, the idea to frame our setup will be to look for a run on buy side liquidity, right? So now what I meant by framing your intraday setup within your current trading days range, okay, this is what I mean by it. Okay, so now this is on Fridays. Okay, this is, we all know this right here always delineate my midnight, right? So now this is on Thursday's trading. Okay, this is midnight Thursday to midnight Friday. Okay, so more like a 24-hour time window, okay, or thereabouts. Okay, so now we had a price action that's bearish, right? So this is my New York midnight opening, right? And I'm expecting a run on buy side liquidity to short the market from, right? So now the whole idea of this is what I've been trying to explain, is that the idea of looking for highs, which of the highs is prior to all prior to this. Okay, let's say you just pull up your chart. Okay, prior to all this price action right here, we're going to try to ignore this right here, that none of this had happened, right? So let's say we just pull up your chart and probably the London sessions opening somewhere around here. Okay, so now you're going to probably be thinking, if I'm going to go short, I'm going to probably look for anticipating an old high. Okay, some run on buy side liquidity, and some traders attentions are this is going to differ, of course. Okay, some traders attention are definitely going to be going to, maybe I'm going to look for a run above this old high. Okay, and probably if price runs above that old high, I'm going to short. I'm going to look for a short above that old high, right? Or probably some traders, if we have different groups of traders, okay, let's say generally smart money traders. Okay, let's just say smart money traders. If we have some group of smart money traders in a room right now, okay, if all of us if we have some quite numbers of smart money traders in a room right now, and we are seeing this price action for the first time, okay, and we just pull up our chart, and this is our London Q zone. Okay, you can see the time is 2, this is 3 a.m below here, right? So our 2 a.m should be somewhere around here. That's the time for our Q zone, new London Q zone. Okay, and of course this is the futures market. Okay, we start our hunting on from the 8:30, right? Start looking for a setup from the 8:30, that's when our New York zone starts. Okay, so now back to what I was saying. So if we have some group of smart money traders in the room right now, okay, and you pull up their price action, okay, and of course we know we are bearish, right? So prior to all this happening, if we were in our London Q zone, okay, so now the idea would be to look for a run on buy side liquidity above the New York midnight, right? So now this is the New York midnight opening price, right? So some traders attentions are immediately going to go to this old high, okay? So they are going to calibrate this out in time that if price goes above this old high, I'm going to look for a short down there. Then some might be thinking, okay, we have this previous day's high, right? We have this previous day's high, and if price should go above that, I'm going to look for a short entry. Okay, so different traders are going to have different opinions. Okay, so what I'm trying to, the main focus of this tutorial is to, to filter that, to break it down for us. Okay, so what I was trying to explain earlier is that we don't really need to look outside of our trading range yet. Okay, we don't really need to look outside of your daily range. Okay, so as an intraday trader, your setup, okay, you should try as much as possible to frame your setup within the current daily range that you are. Okay, so by that I mean your attention should be on to the right side of this 12 a.m. midnight. Okay, so I'm only focused on the price action to the right of this. Okay, so there are going to be times we're going to have an exception that price might likely reach for this old high or this old high. That is when price wants to. Okay, so my attention is basically I'm going to, if I'm anticipating an old high for buy side, for a run on buy side liquidity, I want to see that old high be formed on to the right side of this 12 a.m. midnight. Okay, so I'm more or less not concerned with these old highs or this or that. Okay, I'm more or less not less concerned with these previous days highs. Okay, so I want to see an old high formed to the right side of this New York midnight opening, which is the present trading day, which is on Friday's trading transaction. Okay, so I want to see an high being formed inside of today's dealing range, and I'm going to anticipate a run on that. Okay, so on Friday we had a high impact news, okay, which was around 8:30 a.m. or thereabout. Okay, I can't remember the exact time, but we had an high impact news, right? So now I'm bearish, right? So now when for our Nasdaq futures market, we start our Q zone from 8:30 New York time, right? 8:30 to 10:30 or 11 o'clock thereabout. Okay, so that's basically I look at 8:30, between 8:30 to 11:30. That's just how what I use as my time window for my Q zone. Okay, so no, now if you are bearish, you are going to be, of course, you are going to be expecting price to run be above and hold high, okay, for buy side liquidity to be taken out. So what I'm trying to say is that you don't really need to, you don't it's not really necessary, or how am I going to put it, you don't really need to look aside of the range of your daily, of your current trading range. Okay, to the left of that mid New York midnight opening price. Okay, I'm more or less concerned with this. Okay, so I'm more or less focused on the transactions that is happening right now to the right of my midnight New York opening. Okay, so we had this run here. Okay, so we had this high formed right here. So when I saw this prior to the New York zone opening 8:30, this is more than enough for me. Okay, this is more than enough, so my attention is immediately drawn to this. Okay, so now price started trading down, and this is an high being formed prior to New York Q zone, right? So this right here is more than enough for me. Okay, so now of course price might literally decide to reach for this or this, depending on the volatility that's going to be created by that high impact news that I'm expecting at 8:30, between 8:30 or thereabouts. Okay, so now let's go down further. Now of course, when prior to the New York zone we had this high, so I was focused on this high. Okay, so I was not really much focused on this or this either. Okay, so my attention was on this. I'm bearish. I'm anticipating a run on buy side liquidity. Okay, so now we had that move when the news was released. I think it should be around 8:30 or 9:30 thereabouts. Okay, so when the news was released, and equities market, as we know, opens around 8:30, right? So it created this volatility, this price surge. Okay, it went down first. Okay, and took out sell side liquidity. So sell side liquidity below this old low was push. Okay, so this became a dealing range, right? We had is sell side liquidity, so we have sell side liquidity being pushed right here. okay, during that high impact news. Okay, so price just went down and grabbed liquidity and came up and took out that high that I was looking at. Okay, so now when we had this, I was like, yes, this is it. Okay, so this is what I've been anticipating, this is what I've been looking for. Okay, and as you can see, at the same time, after taking out this old high, it went above this old previous days high as well. Okay, so I was not focused on that. My attention was drawn to the current trading day that I'm actually trading in. Okay, so my attention was on this. Okay, so this is more than enough for me. Okay, it don't really it don't is a price does not really need to go above this. If it had failed to go above this old high, maybe just went through a little bit and failed to go above this previous day high and starts to drop, okay, I don't really care much about that if it reach for this or that or above the previous day's high. Okay, so what I'm actually trying to say is that as an intraday trader, okay, your setups should be your setup should be framed at first in within your current daily trading day. Okay, your attention should be on price action to the right of that midnight opening. Okay, so you can take a look at some reference points, like we have an old high here. Okay, you can take note of that, and you can take note of this old low of this previous day's low. Okay, you can take note of any liquidity void or fair value gap to the left side. Okay, but your main attention should be on this day's transaction. Okay, on this day's price action. That is what your attention should be mainly focused on. Okay, so all these are, if your attention is focused on this, they tend to add as distractions at times. Okay, they tend to add as distractions at times. Okay, so now that was what I was focused on. Okay, so we had this and we had this. So that was when he had the run on buy side liquidity. So now right now buy side liquidity is being pushed. Okay, so price is literally going to reach for sell side liquidity, right? Since we are bearish, so I was expecting price to reach for the sell side liquidity, since this old low has actually been taken out, where sell side liquidity is going to be residing below this old low, right? So price did in fact make that move and reached for that sell side liquidity that I was anticipating it to reach for. Okay, so now let's go down into the lower time frame. Okay, so when we had this move, we had this run above into that says buy side liquidity. Okay, buy side liquidity. What is actually happening, this retail traders are going to be seeing this kind of double top, right? Equal highs, relatively equal highs. Retail traders are going to be seeing that as resistance, right? So when price broke resistance to the upside, okay, so they're going to be those that are going to be buying on buy stops. They're going to have buy stops resting above there, and there are going to be those that are to one short as it was declining. Okay, so two things happened here. Okay, so there are those that bought at premium and those that sold at discount. Okay, so we're going to come back to that in a minute, right? So now we had this liquidity void, right? So this was my point of interest when we had after the run on that buy side liquidity. So I was really anticipating price to reach for into that fair value gap before reaching for that sell side liquidity after taking out the buy side liquidity here. Okay, so going down to our lower time frame further, this is a 3-minute time frame, right? So as you can see, we had that run first, that a short run into the buy side liquidity and came back, took out the sell side liquidity once again, then went up. Okay, went up one more time, had a great run one more time. Okay, so breakout traders are going to be seeing that as going to be buying that at premium, right? So now we had this move, so I was really hoping that this fair value gap is going to be reached for, so that I can go short and look to exit at this low or that. Okay, so but eventually price just created the gap and never came back and left. Okay, so I actually posted this, I shared this on the Telegram community. Okay, I shared this on the Telegram group that I missed this entry. Okay, so now I'm going to show you why I missed the entry. I could have gotten in, okay, if I had looked at this market from the 1-minute time frame. Okay, so let me show you what I mean. So now this is the 1-minute chart. Okay, so this is that run on buy side liquidity. So now we had market has kept pressing higher, right? Then we had that shift in market structure on the 1-minute time frame. We had that shift in short-term shift in market structure, and what is this? This is a fair value gap, right? So this would have been my entry, and my stop loss would have been above this, the third candle, okay, that formed the fair value gap. Okay, So this where my stop loss would have been, and I would have gotten my gotten at right here. Okay, so what I was but I was viewing the market from the 3-minute time frame. Okay, so I didn't get to see this. Okay, so I only saw this, and price had already reached for my fair value for my what's it called, for my TP, because I was actually planning to exit the trade right here. Okay, so now although the price eventually came back and hit and got into my area of interest, and it did trade a little bit off, okay, before reversing. Okay, so now as me, I had gotten an entry right there that would have given me a risk reward ratio of 2 to 1. Okay, 2 to 1 risk reward ratio, but I missed this move. Okay, and I posted it in the Telegram group. Okay, I shared this with the community. Okay, so now this is the first example was planning to share with us. Okay, so now I'm going to show us another example. This is going to be on the crypto market. Okay, so this is Binance coin against paired against the USDT. Okay, so now of course you can see price is bearish, right? And we have just gotten below into sell side liquidity. Okay, then we created this short term high and dropped one more time below, taking out sell side liquidity once again. Okay, so now as you can see, price went up and reach for that buy side liquidity. Okay, and reach for the buy side liquidity one more time. So now it's expected for it. This is a daily, this is now our daily range. Okay, so our price took out the sell side liquidity resting below here. So yes, as price start trading up, yes, sell side liquidity will be residing now, of course, below this old low, right? So my price has already taken out buy side liquidity, and we're expecting to reach for that sell side liquidity. Okay, so of course my bias is bearish, and that is an overall target. Okay, I'm expecting price to draw down into the sell side liquidity residing below this old low, right? So now we have same scenario right here. Okay, so this is my midnight opening, and as you can see, price, this is price going down into that sell side liquidity, taking out sell side liquidity and reaching for buy side liquidity as well. Okay, so I'm expecting a reach down into this liquidity, into the sell side liquidity residing below this old low. Okay, so now my bias was bearish, right? So I'm looking for a run on buy side liquidity to go short at. Okay, so now let's go down to the mid days, to that varies the to the lower time frame. Okay, so this is the midnight opening, right? This is the midnight opening. So now notice how price, this is the midnight opening candle, right? Now notice how price ran up into a previous day fair value gap. Okay, it didn't take out the old high, but it ran up into the previous day's fair value gap, right? And broke structure to the downside. Okay, so price took out sell side liquidity residing below this old low and traded down a bit. Then as it trades down, it creates this fair value gap, right? Now it has it, as it creates this first value gap, you can see the bodies of this candle where liquidity was a bit engineered. Okay, look at how the body of the candle respects the lower part of the fair value gap. Okay, although it's weak through, but the body stayed below the fair value gap, right? So now if I'm looking for a short, what am I going to be looking at? I'm going to look for a run on above an old high, right? And you know, we don't have specific time of day for crypto market. Okay, so but I had this fair value gap, and I had equal highs, clean highs, that is, and I had equal highs, clean highs. Okay, and we are respecting that fair value gap. So this was liquidity being engineered. So this was like kind of a retail support, resistance, sorry, this was like engineered resistance, right? So now notice we had this run above these equal highs. Okay, so those retail traders that we are viewing this as a resistance level. Okay, because price was kind of, you know, notice how many times price reacted of this level, came back, and when we had this breakthrough, okay, when price punched through right here, there are going to be buy stops. Those that going to buy this market on a stop, okay, they're going to look to go long, so they are buying at premium actually. So we are looking to sell at premium, right? So they buy at premium and we are looking to sell at premium. So now you can see we had that move down. So when price took out these equal highs into that fair value gap, I was like, okay, now this is what I'm looking for. Okay, so price does, notice price does not really need to go above this old high for me to know that this is really need to take out this old high for me to know that, okay, that's an old high be taken out, and to look for short, because already price had already shown a willingness to go down by creating displacement. Okay, so we had displacement traded off a previous day fair value gap. Okay, so but I am majorly focused on the highs and lows created to the right side of this midnight opening. Okay, so now we had this highs and being engineered right here. Okay, so price punched through on buy side liquidity. Okay, so now when this happened, obviously I had to wait for a shift in market structure, right? So we have this, and as you can see, now whenever what comes to my mind whenever I see a run on liquidity. Okay, so whenever I see a run on liquidity on the 15-minute time frame, what I expecting is that when we have this first move, okay, once we had this first run, okay, this first move into that pool of liquidity resting above this old high, okay, I want to I know I usually have to, I wait for price to make an attempt to run towards that one more time. Okay, so I wait to see if price is going to run one more time. I watch to see price run one more time towards that high in an attempt to either take it out one more time and shift in structure or a failure swing. So I'm anticipating one of two things. I'm anticipating price to make an attempt to reach for that high back, okay, one more time, to have a run, to have a go at this high that went into that liquidity pool. Okay, so this right here, why am I anticipating this? Okay, number one is for a shift in market structure. I'm looking for a shift in market structure, and secondly, it confirms to retail traders that went long, okay, that bought this at a break and this is going to look like a break and retest to them. Okay, so just imagine there were traders that they're going to have a kind of zone right here. Okay, this is a supply or is it demand zone, I don't know. So they're going to have some kind of trend line or horizontal line on this equal highs, right? So now when this broke to the upside, they're going to see that as break of support, right? So now price trades back down into this old high, right? So this is break of support. This is a retest. Okay, so to retail traders, this is actually a retest. So now this is why I also want to see a run one more time. I like to seek the market, make an attempt one more time towards that old high. Okay, is it that to go above it or to break down suddenly? Okay, so now using this single high as a case study, ignoring this. Okay, uh actually they are going to have a zone, it's more like a zone, but they are going to just be those that be looking at single highs like this. Okay, so now when this broke, okay, so now this is actually coming back to retest this old resistance as support. Okay, so this is support turn resistance to on a retail traders concept. Okay, on a textbook concept, this is support turn resistance turn support. Okay, so now this confirms today that price is, so now this attempt of price towards this old high confirms to retail traders that this is actually a strong support level. So they are going to place more buys, and they are going to place their stop loss below this old low. Okay, so now this confirms to me, as price makes this attempt, it confirms to retail traders that this is actually a strong support level to buy at. But I would like to see this run, and I would want to see, that is when as it makes this run higher, that is where I anticipate to see a shift in market structure, which is obviously what happened right here. Okay, so we had price run into buy side liquidity, traded back and retested resistance non support on a retail trader concept. Okay, made an attempt towards that high and broke down. Okay, so a shift in structure. So this is a failure swing, right? This is a failure swing. So price shifted in structure. Did we shift in structure? Yes. Did it create a fair value gap? Was there an imbalance? Yes. So this was my entry. Okay, so this was my point of interest. Okay, so now let's go down to the lower time frame and look at how that looks. Okay, so this is the 15 minutes time frame. Okay, what we actually viewed it from this, the 15-minute chart. Okay, so okay, yeah, let's mark that fair value gap out. Okay, so this is the fair value gap. Okay, so price ran into buy side liquidity. Buy side liquidity was being pushed. Okay, was being sucked in. Buyers were buying at premium. They were buying at premium, buying on premium. Okay, price confirmed this as a strong support level, made an attempt one more time to where this old high and broke down. Okay, so shifted in structure, short term shift in market structure, right? Created an imbalance. Okay, so this was my trigger point. This was my trigger point. So I had to go down to the lower time frame and look for an entry right there. Okay, look for the same thing. Okay, so now this is the 3-minute chart. Now if I had looked at this on a 3-minute chart, okay, I would have gotten in earlier, but this was the this is the fair value gap from the 15-minute time frame. Okay, so now this is the fair value gap. If I had looked at this chart from the 3-minute chart from my shift in market structure, I would have gotten in earlier, because as you can see, we had that run on buy side liquidity. Price made an attempt one more time and broke down, creating this fair value gap, traced up into it and broke down one more time. Okay, so this is that shift in market structure on the 15-minute chart. So we had this shift in market structure and we had that fair value gap. So as price trade into it right here, I sold right here, went short, and my stop loss above that candle's high. Okay, so now I was basically aiming at, since we are already taking out buy side liquidity here, so I was aiming at the sell side liquidity resting below these old lows. Okay, resting below this old low. So as you can see, price made down and almost reached for it before it starts reversing on me, because this is a weekend. Okay, this was, I think, on Fridays, or is it Saturday? Is it today's transaction? Okay, you know, it's on a weekend, so price has already created the low of the week. Okay, and that's why we tend to see that move up. Okay, that's why we see that reversal, of course. On Friday tends to form the low of the week as we know it. Okay, so now basically that's what I've been trying to explain earlier to us. Okay, so now looking at adding a little extra lesson. Okay, I'm adding a little extra lesson to round this up. Okay, so now the textbook or retail definition of a trading market, as we were taught when we started off trading retail concept. Okay, so the definition, or the book definition of a trading market is: price makes a low, a higher low for an uptrend, of course, then makes a higher low, a higher high, higher low, higher high. Okay, then for a downtrend it will be something like a high, a low, a lower high, lower low, lower high, lower low. So this is a classic definition of trending market for on a retail concept. Okay, but that's not actually what's going on behind the scenes. Okay, so this is what is actually going on behind the scenes. Okay, smart money hedging the market. So this is how smart money hedges the market. Okay, I believe I've talked about this in one of our previous episodes. Okay, so now for smart money traders, as large institutions traders, you know, as we are aware, they have large pockets, right? They have deep pockets, and they can definitely fill in their order at a single go. Okay, on a single transaction, they can't fill in all of their orders. Okay, so they have to cut those orders short. They have to cut them into different positions. Okay, they have to break it down. Okay, so now what is actually going on behind the scene is that we're going to have price leave some sort of support level. Okay, run up, creates a low, then between this low, this high, and this low, between these two reference points, we're going to have some kind of, there might be little movement. Okay, let me just use the general consolidation. There's going to be kind of consolidation. It might not likely be a consolidation. It might be a price might likely make a low, a lower high, lower low, kind of a rough movement. It might be sideways, it might be a little bit trending, then suddenly there's going to be an impulse move higher, taking out that liquidity, taking out the buy side liquidity. Okay, so now what is actually going on here is that smart money accumulated some more positions down here. Okay, they accumulated some long positions and went up. Now as the market starts to drop, okay, as the market starts to drop, there are going to be those that are going to see this as short, as a reversal. Okay, going to see this as a reversal, some kind of, they're going to have different interpretation on this. Okay, they're going to go short on this, so they are going to be selling this short-term rally. So now as price went up, expands higher, creates another leg higher, and we are going to have a kind of consolidation within this range. Okay, so now under below this range, I'm going to be this range is going to create a kind of support level that traders are going to see that are going to buy at that. So what price is actually going to do, as it creates this high, so it's going to create a higher high. Now those that are bought on the buy stops are going to buy, they're going to be buying as premium unknown to them. Okay, but remember we said anytime price trades above a short-term high, that's short-term premium. Anytime price goes below a short-term low, that's a short-term discount, right? So now as price goes above this shortcut. Okay, so now as this price goes up, of course there are going to be little kind of consolidation. It might not likely go up in a straight form. Okay, But this might be a long leg. Sometimes it might be short. Okay, then it might create little kind of consolidation right here. Okay, so as price goes down, it's going to come below that short-term low, that short-term kind of consolidation or little impulse and corrective moves that it had between these price legs. Okay, so between these two reference points, there are going to always be some kind of movement, some kind of short-term low, short-term high formed, and another another leg, another expansion higher in terms of an uptrend. Okay, so now smart money is going to buy as price creates this high, as it starts rallying downwards. It's going to go below those short-term lows, okay, that were formed in between these two high. Okay, those short-term consolidations or short-term trends that were formed, sideways trends that were formed between these two reference points, price going to go below those short-term lows. Now, in process of going below those short-term lows, some real traders are going to be that we are viewing that as a kind of strong support level. They're going to see that as a breakout, so they're going to sell those breakouts to go short. So that's, they are selling at discount. So smart money is going to accumulate those shorts to go up. Okay, so as the market is trading up, smart money are buying and selling at the same time. Okay, so they are creating liquidity to those that look to go short, to look to sell below those short-term lows. Smart money is going to accumulate those shorts to go up. So now as the market creates a higher expansion ups between this range right now, between this range right now, between this leg, higher price leg is created right here, there's going to be some kind of consolidation or some kind of minor little kind of trends in between them. Okay, so now price has already created a leg up. Smart money has accumulated some position here. So now who are they going to sell the longs to? The willing buyers that are residing above this short-term high, that wants to buy on a breakout at premium. Okay, so every time price goes above an old high, that's premium, right? So smart money are going to accumulate the shorts down here and sell to the willing buyers that are willing to buy at premium. Okay, so now once smart money buys sell to them, they are going to accumulate as they sell the buyers that bought from them. Okay, so now smart money are going to look for new buyers that they are going to sell those shorts that they accumulate from the breakout traders right here. Okay, so two type of traders are residing above this old high, right? Those that are looking to go long on a stop, or those that have their protective stop loss above here. Okay, so that's the pool of liquidity that's going to be resting above this old high. So smart money accumulated long here as the price trades above, creates a higher price leg, they are going to offload those long and look for short. So now as price to continue going higher deep into premium, they have to be buying, right? They have to be a kind of money being moved into the marketplace, right? Now smart money are going to accumulate shorts here. So we are going to look for buyers. They're going to that old kind of consolidation in between these two price leg. Okay, sometimes price may likely reach for the first leg. Okay, sometimes it might be a kind of short-term low between the range. Sometimes it might reach for that previous price leg, reach covered, trade back down all through the range, okay, and reach for the old, or for that low, for that previous low, for that previous low, okay, and expands higher. Okay, sometimes it might be a consolidation that is in the midpoint of the range. Okay, so as price reaches from the low of this range to the high, reaches down into discounts, there's going to be kind of low or imbalance right there. The price is going to reach into and goes up. Okay, so now every time this price makes a higher high, runs above a short-term high, that's smart money accumulating shorts. So where are they going to offload those shorts? Below an old low, where there's going to be willing buyers. Okay, so that's just basically what I've been trying to explain this. Okay, so as price goes up, so this is how price is going to be creating higher highs and higher lows. Okay, so it's not going to be a perfect way like the textbook describes it. Okay, it's going to be kind of high, creates a low. Okay, where there's going to be, and below that low there's going to be sell side liquidity, right? As price moves above this short-term high, accumulates shorts, where our smart money going to offload those shorts, where they are going to be willing buyers. Okay, so they are going to look for buyers that are willing to to buy. Okay, So as they accumulate the shorts right here, they're going to look for willing buyers to buy from them. Okay, so they're going to sell to these guys, accumulate more longs. As it goes up, sell to these guys, accumulate more shorts, comes down, so it's going to go below some kind of buy side or sell side liquidity. So where does buy side or sell side liquidity reside? Above old highs and below old lows. Okay, so I know that's kind of, was a little bit much to understand or comprehend. Okay, so but the basic of what I'm trying to say is that this is the market is never going to move in this kind of clean trend. Okay, the market is never going to move in this kind of clean movement. Okay, so there's going to be there have to be hedging. Okay, there has to be hedging as the market goes up. As it press higher, there's going to be hedging. Okay, so this is how smart money hedges the marketplace. Okay, they sell at premium, buy at support, buy at discount, sell at premium, buy at discount, sell at premium, buy at discount, and so forth and so on. Okay, sometimes the ranges are going to be long. That's why we have a long term dealing range and short term dealing range in between. Okay, so this one price leg, they're going to be short term dealing range in between it. Okay, so this impulsive move, they're going to be short term dealing range in between. Okay, so that is just how they hedge the marketplace. Okay, so now basically that's how this looks like. Okay, so why do you think we had this? Of course, trying putting this what I've just explained in the concept of price action, this will be our long-term dealing range. Okay, from this high to this low. Okay, so notice between this high and this low right here, we had short-term highs and lows. Then notice how price went above this and cleans out those liquidity resting above these old highs. Okay, so now as price reaches for that liquidity, for this liquidity, cleaning out this liquidity, sell side, buy side liquidity resting above these short-term highs in between these two long dealing range. Where is liquidity going to be residing right now? As it press higher, liquidity is going to be residing below these old lows, right? So now smart money reaches into that pool of liquidity, in the premium aspect of this range. Okay, because from this high to this low, the midpoint is definitely going to be around somewhere here. Okay, so this is premium, right? So price has actually accumulated enough short positions to go short at. Okay, so they bought those that buying this as a breakout. Okay, this short-term high, when price trades through, retail traders are going to see that as a breakout retest, right? They're going to go long. Now price took out another short-term high right there. Okay, they're going to be those that bought on buy stops, right? Buy stops, and those that sold, that were lucky enough to see this as resistance and sold, they're going to have their stop loss resting above that. Okay, so our price goes up, it is hedging the market. They are accumulating shorts. Okay, they are selling to these willing buyers that are willing to buy at premium. Every time the price move above this short-term high, that's short-term premium. Every time they move above a short-term high, that's short-term premium. Okay, so there are those that are buying at higher prices. So as price starts to drop, they are in losses. Okay, because they bought way too high. So as price starts to depreciate, they are in losses and they are forced to sell off at loss. Okay, so that's basically how hedging works. Okay, so what I've been trying to explain since the intraday framework idea or analysis. Okay, what I've been saying is that you don't necessarily need price to reach for some kind of previous day highs or low. Okay, your current daily trading day range is more than enough to frame your setup. Okay, that's just basically what I've been trying to say. Okay, your current dealing range, your current day dealing range is more than enough to frame your setup. Okay, price is not there. There are going to be times it's going to reach for it. Okay, like we see here, price, like we saw here, price reached for this high and this high as well. Okay, so there are going to be traders that bought this on buy stops, that had buy stop above this order. Okay, they went long, they bought at premium because price went above a short-term high, right? They bought at premium and we sold to them and went short and exited at discount. Okay, so those that had their sell stop right here below here, as price broke at the first time, okay, they are selling at discount. They sell way too cheap, right? They are expecting price to drop more, but price went up took out their buy stops. That's just how hedging works. Okay, this is a very perfect example of it. Notice how price makes this run. First it took out, it sold to the sellers, the buyers that were resting below here, right? Those that were looking to sell short on to go short on the sell stop, right? They accumulated those shorts and went up, sold to those that were willing to buy at premium. They sold to them, came back one more time and made an attempt, and just that. Okay, right now this side, this buy side liquidity has been taken out, right? So we can expect a move down into premium liquidity. Okay, so that's just basically what I've been trying to explain, and I do hope we are clear with it right now. Okay, so remember our Telegram group link is always attached to the description box, right? So you can join our Telegram group link, and if you have any further questions or requests to make, okay, so I'll see you guys in the next video, and do have a great trading week ahead. Okay.